Good morning, I'm Angie Austin with Oil and Gas 360 here at the 2015 Enercom Oil and Gas Conference in Denver. And I'm joined by Garth Braun, the Chairman, President, and Chief Executive Officer of Blackbird Energy Incorporated. When we started the interview, Garth informed me that we cannot be boring. So the pressure's on you, really, because I just do the interview.
Absolutely. I'll try not to be boring, and I'll be exciting to the audience that watches us.
Now, how long have you been coming to the conference?
This is actually, I'm a virgin to this. This is my first time at the Enercom, and I am telling you, I'm impressed.
It is really quite a gathering, isn't it?
It is very substantial. I think there's probably over 2,700 people here. But what I really found is just the interest in both the majors that are here and a small company like Blackbird that we could show up and have a real strong audience, and our one-on-ones have been impressive. I really have to thank Aaron and Greg for that.
So you've had a lot of meetings, and so far you've really had positive results?
Absolutely. Yeah.
Excellent. All right, I'm going to talk a little bit first, start with your presentation, and hopefully that was not boring, because I want to talk about Blackbird has assembled 78 sections of land, almost 50,000 acres, in a liquids-rich corridor at Elmworth Gold Creek. Now, in your presentation, you said, quote, the neighborhood is becoming prolific for high condensate to gas ratios. So tell us, who are the neighbors that you're referring to, and are they finding the corridor to be rich and impressive?
Well, I'll start off by saying is that when I put my footprint or purchased my 50,000 acres, the neighborhood wasn't as proliferated as it is today. Today we have Apache directly to the south of us. They're presenting at this conference. We've got Encana directly to the west. They've just actually drilled a well 2 miles from our lands. They've drilled about 54 wells west of our lands. We have Shell, I think you probably know about them, and then a couple other companies, including CNRL, who produces 25% of Canada's natural gas and oil, and then we have another company called Chinook Energy. So we've got a wonderful group of companies that are further de-risking our play and actually drilling closer and closer to our lands.
So you kind of moved into a subdivision as like the first homeowner, and then all these people went, wow, this is a great neighborhood, we're going to move in.
Absolutely, and in fact, I think that the interesting thing is that when I assembled my land, I did it through 4 different companies, and it looked like a bunch of mom and pops were coming in. And August last year, one company came in and bought 12 sections right beside me, and it was a 12-section block. They paid $35 million. Well, I've put my 78 sections together for $6.9 million. Now, $2.9 million a section versus $88,500 per section. I feel we've done pretty well, and geologically, we don't see any difference.
Interesting. Wow. Well, you're pretty happy about those numbers.
I'm happy that we've assembled our land. You asked the question is what's going on in near proximity.
Yeah.
I'm going to actually put a big thank you out to Encana Corp. Encana's drilled 2 wells to the west of us. One of them, the 13 to 22, was just drilled and completed in May, June. And this well is tested at over 346 barrels of condensate per million feet of gas. Now, that's a very, very liquid-rich well. And they have another well, the 2 of 15, which just came off confidential. That's an upper Montney well, 2.2 million feet of gas, and about 705 barrels of liquids. These are economic wells in this current environment.
Yeah.
And these are all on trend with our lands. So I would say that what we love about it is we're in a great neighborhood.
Yeah.
I've got some guys building some beautiful mansions around us.
Yeah.
And we have our own desires on building there. But
well, it's interesting. It's really interesting that you can learn from your neighbors and what they find that you can get excited about, because you know it's more than likely that you may find something similar on your land.
Angie, you've nailed it. That's a great question. And I'll tell you is that as a junior oil company, we're always looking to understand the innovations in the field, what's being done, and how we can adapt those to make us more cost-effective and optimize both our drilling and completions. We've got a company called 7th Gen. Pat Carlson's the CEO, wonderful man, and we've learned a number of things from how they've drilled and completed their wells and incorporated that into us. So as Encana's completions programs, we've learned from them, and in essence we're using similar designs on drilling and completion to achieve better results.
It's a business where copying or learning from each other is a good thing.
Well, you know, I'd say this in the Calgary market. I'm an Albertan, and I love my province and my country. But one of the things I really prize of Calgary is this willingness to help.
Yeah.
And Pat Carlson and myself had dinner, and we were talking about how it's so important that we just shine up the Montney. It's like a diamond,
Yeah.
and we need to keep on shining it. So the success of other companies isn't a downtread to anybody else. It's actually benefiting all the people in that sector.
That's wonderful. All right, well, let's talk a little bit about the wells and drilling plans. Blackbird has recently completed 2 wells targeting the upper and middle Montney, both confirmed liquids-rich deliverability. So where are these wells in the trend, and what are your drilling plans for the play for the balance of 2015? You can tell we've done a lot of research on these questions, can't you?
It's amazing. Great job. I actually like the way you rolled out deliverability.
I know. That was good, wasn't it?
That was phenomenal. You weren't a weather woman before, were you?
Yes, I was. Yeah.
Well, I'll say is we drilled 2 wells, one in the upper and one in the middle Montney, the 5 at 26, and these are just on test. But the 5 at 26 showed us that we were liquid rich. We were producing at over 340 barrels of liquids per million feet of gas. We've only recovered about 32% of our load, which is our water. We need to get more out, but we're going to put those wells on production to be able to further test them. Our middle Montney, we drilled, it came on with a higher H2S level than we had counted on. So we had to flow it on a choked basis. But unchoked, we've had engineers look at it and estimate that this well would have produced around 3 to 3.5 million feet of gas and about 135 barrels of associated liquids. Both of these wells are right in what we believe to be the central core of the liquid-rich corridor that runs right through our land for both the upper and the middle Montney. So it's confirmation. It's delineated that they're both liquid-rich, which is what we're driving after in low commodity prices, gas and oil and condensate. What are our plans? I can share, and I'm going to share this now, is that we're planning to proceed next month with drilling our next well. This will likely be a middle Montney well, but we're drilling a pilot hole first to assess both the upper, the middle, and the lower Montney, and then we'll sidetrack off of it. This will be a 2,000 meter long horizontal. I don't want to do my math too quickly, but probably about 6,500 feet. This is going to be a multi-stage, 50 stages, and it's going to be individual ports that we're going to open up using a sliding sleeve system. So we're trying to, in essence, give us maximum ability to have a good look at this formation and fracture it up.
All right. Let's talk about the Montney corridor. Let's talk about the significance of the overpressured Montney corridor. Where are Blackbird's properties in relation to this zone? How big is it, and why is it important? A 3-part question,
wow.
Garth.
I don't know if I can get to that third one. Remind me what it is at the end. But I'll tell you this, is that first off, when we talk about the Montney, some of your viewers are going to go, Montney, what is that? Well, we call it the Permian of the North. Right at the present time, the Montney is producing about 4.5 BCF of gas a day. This represents probably 30% of Canada's natural gas production. And the Montney, the main focus everybody's come into it is it, aside from the well economics that are very good compared to other plays in Canada, the Montney is the underpinning of future LNG projects on the West Coast. 18 LNG projects have been proposed on the West Coast. Probably 7 are going to go through. Our National Energy Board has already approved 7 for about 14.9 BCF a day. So that's huge. Now, why is the focus in regards to the Montney, and what's important about it, overpressure? Well, number one is the Montney is about 650 feet deep or 200 meters, and the overpressure goes to the economics of the wells. If it's overpressured, the deliverability of the gas and the condensate to surface is higher, okay? So your economic returns are better. We've already confirmed with our middle and our upper Montney that both are overpressured. And in essence, probably 5 years ago, people would have thought the overpressured zone was further west, close to where Encana has drilled 54 wells. Now with our drilling, we've actually substantiated that the overpressured zone is to the east of our lands, and all of our lands are encompassed as being overpressured.
All right, let's talk about lowering costs and enhancing things. So can you talk about some of the ways you're lowering the costs and enhancing the completions, rig selection, moving to pads, drilling fluids, slick water versus N2 foam? what's the right combination? I mean, this is all, to me, as a layman, kind of fascinating, some of this stuff to learn about.
Absolutely, and I'm going to teach you in this
Okay,
portion of the
all right,
interview.
I'm ready.
Are you
my
ready?
pen, yeah.
Okay, the very first thing is I'm going to talk about is just rig selection.
Okay.
And I'd have to say is our next well, we've lined up Enside, which is one of the major rig companies in Canada. We actually pulled a rig from that was drilling the last wells for Encana, a triple, and we've moved it to our property. And what I love about it is that not only have I contracted this rig, but I actually have reduced the cost on that rig by probably about 45%.
Really?
So with the downturn in the commodity price, one of the objectives of the CEO is, let's go out and get prices to be better. And so I've actually contracted this rig for approximately $16,000 a day. Normal pricing would be around $25,000. That rig is a hot crew. That crew is the crew that runs that is very experienced. They're familiar with the Montney. That's going to help us a great deal. Then we go on to motor and bit selection, and I've just gone through an extensive review of the top 10 wells that have been drilled in near proximity, and then I have to thank companies like Encana, NuVista, Apache, and Shell for drilling. We've looked at their motor and bit selection, and in essence, we've evaluated what best combination would it be for different components of the well and what we should use. We also looked at what kind of mud we should use. And you might think about this mud, like mud, what would that change? Well, we are actually going to a brine-based mud, an almost a saltwater mud that cools the bit. We're drilling down to around 2,357 meters, just about an 8,000 foot depth, and then we're going out another 6,500 feet. Well, you can imagine how hot that bit is when it gets down into that area. We found that brine actually cools the bit and gets the obstructions or particles out of there and allows us to get greater drilling achievement. Our last two wells were drilled for 49 and 39 days. We're actually targeting now to drill this well in 25 days. That goes to number one, I've got the rig last. We're going to have less bit because as we're drilling faster, we should be able to reduce it down.
Right.
And also we're going to have less time with crew on surface.
Wow.
Did I miss anything there?
The N2 foam.
The N2 foam.
Versus Slickwater.
Well, one of the things about Slickwater is that on our last Middle Montney well, we put in about 97,500 barrels of water to fracture up the Montney. Now, when you want to get a look, you've got to recover 40 to 50% of that water.
Right.
Well, when that water comes back, we have to, in Canada, properly dispose of it. We treat it, and then we dispose of it. Well, that costs a lot of money.
Right.
And so, and sometimes when we're just flaring to have a look, we don't get a good look at the formation. By going to N2, first off, that's an energized frac, so we'll be able to get a complex fracturing of the Montney. But number two, we're using about 1/3 of the water. So as we're flowing the well back, we don't have to recover so much water to get a good look at the formation.
Obviously, cost savings there.
Absolutely.
All right, well, now I learned about Slickwater versus N2 foam and water recovery.
Absolutely.
All right, let's talk a little bit about finances. Let's talk about the company's balance sheet and liquidity, and what about cost structure, G&A?
Okay, good. You threw that in there.
Yeah.
I like that. First off, the balance sheet's strong. We've got $23.5 million in working capital. And that capital that I have not only takes us through drilling this well, but also to basically build out my infrastructure so I can tie my first 3 wells into production so I can start to cash flow. So in essence, if my investors were looking at this, or a potential investor, they'd say, is how many more dilutive rounds are you going, Garth? At the present time, I can finance both my drilling and infrastructure, tie in, go to production, all within my balance sheet. That's critical. Now, in regards to G&A, it's one of my happiest places. Sometimes we talk about it, we're not in the bottom quartile, which is the bottom 25% of G&A in Calgary. We're in the bottom quartile of the bottom quartile. My attitude towards compensation is I want people that work in my company that are shareholders, and we're driven for success. We've kept our lower overheads very low, because we feel that the more money we put in the ground, the more we can deliver value to the company, and that's where we get our benefit.
Mm-hmm. Wow. All right, I know you want to talk a little bit about value build optionality.
Yeah.
And I would too. I would also like to speak about value build optionality.
Do you know what that is?
No, that's why I underlined it right here with a big question mark and said, ask Garth about value build optionality.
I love it, Angie. I'll start off by saying this: if you go to the beach to suntan, you might as well throw a hook in the water. So, and what I mean by that is that in a time like this where we're having a fairly major rollover in commodity prices, oil and gas, we're going to see probably some debt restructuring. We're going to see some of the banks put some pressure on some of the companies. It's probably going to happen around October. I feel I have good access to capital. I've accessed capital last year, brought on some very good investors and funds. If the right asset shows up and it is a tuck-in for us, we would look at acquiring it. I'd love to be able to pick up another 1,000 to 2,000 barrels a day of production if it fit with what we had, principally light oil, and I feel I can have the capital, and when the markets turn back and when we get a recovery of commodity prices, both oil and gas, I think that we'll have good torque on that. That builds value to our shareholders.
All right, this is your first year at the conference, so let's say next year we're sitting here and I'm interviewing you. Where do you think things are going to stand next year? Like, let's look into your crystal ball, Garth's crystal ball.
Well, Angie, the first thing you're going to say to me, and for me to turn the question.
Congratulations on your success.
I think so, but I'm going to say this, is Garth, I wrote these milestones down. Number one is you were going to drill your third well, and it was going to be, I think, pretty good. That's what you were going to write, probably.
Yeah.
Number two is you're going to tie that infrastructure in, and it's going to be done within the balance sheet. And number three, you're going to be a producer and cash flowing. And number four, maybe you've bought some production. I would say is that we're in that transition mode from having accumulated a large land block and become an emerging energy producer to being a producer and probably expanding production. We're going to start off at 5 million feet of gas and correlated liquids, and hopefully next year we're going to be substantially greater in production.
Well, let me grab my checkbook before you go. I want to become an investor.
Well, that's your decision, but I will say this. Thank you so much. Probably the most enjoyable interview I've ever done. Just wonderful.
Well, stick around while we do the close, shall we?
Absolutely.
Yeah. I'm Angie Austin with Oil and Gas 360, and we're here at the 2015 Enercom Oil and Gas Conference, and we had quite an enjoyable interview. I hope you enjoyed speaking with Garth Braun. I certainly did, Chairman, President, and CEO of Blackbird Energy.